Well, hello and welcome again to the FBAA 2020 Commercial E-Masterclass. Now, this Masterclass, as you pretty well know, has run for the week. We're now on Thursday, one more day to go. And the whole idea has been to help you guys understand how to work the commercial lending space in these really challenging times since we've had to cope with a thing called COVID-19. Now, we want you to jump onto the FBAA website and click on the upcoming webinars to register for the live panel sessions tomorrow, which I'll be hosting. Now, if you miss any session during the week, they will be going on to the FBAA YouTube channel and you can watch that back in your own sweet time. A few housekeeping matters before we get started. There is a 0.5 CPD hour point allocation to today's session. However, please ensure that you stay and watch throughout the whole session to ensure your attendance is marked and that you actually do get the CPD code, do the feedback survey, and also get the point itself. A huge thanks to our sponsors. Without them, these sort of things would never happen. The platinum sponsor is Lend, our MC sponsor is Speedy Finance, and you'll be hearing from both of them later today. Without them, this wouldn't be possible, as I've already said. You'll be receiving their contact details following the session, so please make contact should you have any further questions. Then there are the content presenters who have given up their time to compile this info for you to assist you in your commercial lending. Now, please also refer to the Commercial Masterclass ebook that you can download as a PDF from the FBAA website, which outlines all the presenter details and the company information, the agenda for the week, as well as the other beneficial information that you have been able to access. So let's get started. I'd like to introduce to you Cristian Fedrigo from Get Capital. Now, he's going to talk to us about asset finance and SME Unpacked. Take it away, Cristian.
Thanks, Peter. Very proud to support this 2020 Industry Digital Commercial Masterclass brought to you by the FBAA. Today, we're going to take you through a variety of topics, all specific to asset finance and SME. Now, in the next 20 minutes, we're going to cover a variety of topics. We're going to talk about the instant asset write-off, cover some key things that are important for you guys to know. We're then going to move towards the SME guarantee scheme. Quite topical at the minute, and with only 2 months left inside of the scheme cutoff date, we'd like to bring you up to speed in case you haven't already seen the information. We're then going to move into something that Get Capital uses to provide insight to you guys in the interest of your customers. It's called the SME Sales Index. And to finish, I'd like to provide our points of view on a technique you can use to strengthen your relationships with your customers. So let's get into it. To begin, I'm going to start with the instant asset write-off. Now, naturally, the 30th of June cutoff has finished, but the scheme itself under the current charter has been extended to the end of December. So I might just touch on a few of the fundamentals for you guys. The first thing to consider is that under the scheme, you can claim an immediate tax deduction on any new or second-hand asset that's installed, ready for use inside your business before the 30th of December 2020. So that's been extended. Okay, the limit or the threshold has been lifted. It's previously $30,000 and it now sits at $150,000. That means that it's applicable to a whole variety of asset purchase, not just your small, new or second-hand motor vehicles. And the final thing is turnover has been extended up to 500 million. So business eligibility, it now ranges from small, medium, and large enterprise customers. And if you think about what that means, even large-scale businesses who may be benefiting from the government's investment into infrastructure may weigh up the decision. It may become extremely appealing to upgrade their entire fleet in support of those projects as well. So a great initiative there. Now, I'd just like to make the point here, I am not a licensed advisor nor an accountant, so this information should be considered general in nature, and I do encourage everybody, broker and customer, to speak to their accountant before weighing up the decision to buy. Now, a couple of things worth mentioning here. The scheme is what's called an accelerated depreciation. Now, that means that in essence, you're forfeiting future entitlement to claim a tax deduction on the effective life of each asset. So weighing up the decision whether it makes sense is important, and that's where the accountant will provide more tailored advice suited to your customer. Now, the asset must be installed or ready for use before the cutoff on the 30th of December 2020 to qualify. So as an example, if you were to purchase a motor vehicle on the 28th of December and you take delivery next year for that asset, it may not qualify under the instant asset write-off scheme. Okay. Now, it does exclude any private use portion, and if we look at motor vehicles specifically, the cap on depreciation is 57,500 or thereabouts, which means your deduction is limited to that threshold. Now, this is why it's really important to speak to an accountant before deciding whether this is right for your business, because in some instances, it may not benefit a business or provide any immediate benefit in addition to what they're already doing. It may not apply to anybody breaking even or making a loss. And the most important thing to consider when looking at the instant asset write-off, in order to claim depreciation and other tax advantages on any asset that's used for the business, you need to have title to the asset, which means as a lease, the customer doesn't actually have any title to the asset, in which case, if you're leasing or renting the asset, you may not necessarily qualify for the instant asset write-off. So chattel mortgage or finance purchase is the one that essentially creates eligibility. Once again, very important to speak to your accountant before weighing up the decision to buy. So a little more to it when you dive into the detail. Now let's bring that to life. We've got a case study example here. Manufacturer or distributor of sporting equipment, national distribution network, sporting goods Australia-wide. And due to recent growth, the business has decided to expand its fleet in order to service its network of retailers. They're purchasing an additional truck. Now it's a second-hand truck at the price tag of $150,000, and they're set to take delivery of that asset just inside of the December end of year. Now it's operating as a PTY limited company and its annual turnover sits at $3 million. So the first thing you'd look at is its eligibility. Does it qualify for the instant asset write-off? Now based on revenue and asset, condition, age, price tag, all of which appears to qualify. Date installed or ready for use is inside of the cutoff, meaning the end of December 2020, so it qualifies. Eligibility for tax deduction purposes, 150,000, that's a tick. Okay. And just looking at the company tax rate for a corporate turning over $3 million, it's currently sitting at 27.5%. So eligibility has been satisfied for the business and the asset they're purchasing. What that actually means, and remember, this scheme isn't limited to any number of asset purchases, it's uncapped. For each $150,000 purchase the business makes, they can receive a potential tax saving of up to $41,250. Okay, now just remember, this is not tax advice. This is a general case study example of a business who buys that asset and receives a potential tax saving of up to 27.5 cents in the dollar for every dollar spent. So it's quite a significant benefit for any business who may or may not be weighing up the decision to buy. So very important, speak to your accountant, encourage your customers to speak to their accountants and make sure that the scheme and the decision is right for them and they're not just getting caught up in the FOMO of it all. So moving on, we'll start to talk about the SME guarantee scheme. And for anybody who's been living under a rock, the government has decided to act swiftly here and provide all manner of support in the interest of keeping the economy alive. Now, one of those mechanisms was known as the SME Government Guarantee Scheme. Now, what I wanted to talk to you about is just the basic elements of the scheme. There are 41 participants, both bank and non-bank, currently acting on behalf of the scheme. So let's go through some of the fundamentals. These are for unsecured loans of up to $250,000, and I'll circle back to that $250,000 figure in a minute. Okay, applications must be submitted before the 30th of September 2020, which means in essence there's about 2 months left under the scheme as it stands today. These offers come with no repayments for the first 6 months. The interest in that time will be capitalised or added to the principal amount lent. Eligibility for these scheme loans extends to any business with an annual turnover under $50 million, so quite broad and really targeted at small to medium-sized business there. The loan terms are out to a maximum of 3 years, and these loans are secured by directors' guarantees only. So no GSAs, no registered charges, no property security in essence to apply for a scheme loan. Now, a couple of myths I just wanted to bust here, what the scheme is not. This is not government money, so any participant of the scheme needs to underwrite and fund through their own mechanisms and warehouse facilities. It's not to be used for refinancing, which means it's got to be for new lending requirements only. It's not a guaranteed approval either, which means each lender in their own right, bank or non-bank, needs to consider the creditworthiness and the ability of the customer to repay the debt when payments resume in 6 months' time. Now, if we just have a look at the scheme charter itself, I'm bringing up 3 key points here, and these are directly from the rules. Has to be applied to support current and upcoming cash flow needs. So it's really designed to assist businesses with their working capital and liquidity and operating expenditure requirements. It's not to be used for refinance, as I've mentioned, and the limits under the scheme shall not exceed $250,000 in aggregate across all participants of the scheme. So what that means, if a customer takes on $100,000 under the scheme with one institution, they still have the ability to secure up to another $150,000, so $250,000 in aggregate under all scheme participants. And I think the question that most people have asked is, how do you manage that across all participants? Well, it's going to need to be a voluntary system, in which case the way Get Capital do it, which I think is quite consistent with all manner of lender, is the customer will be required to execute a declaration advising that they're compliant with the following requirements and haven't exceeded the $250,000 cap. Okay, so just a couple of things I wanted to highlight here. This is incredibly relevant and it's designed to support customers in their time of need. No payments for 6 months can be a significant aid for customers, especially when experiencing declines in revenue due to forced lockouts. The solution is there for both bank managed and non-bank managed customers. We have banks and non-banks participating in the scheme, so there's something out there for every customer of yours. And naturally, an incredibly powerful tool to cement your value now, whether it's a need that is required today or in the future. It's just going to be a great relationship building tool for you to talk to your customers about. And no doubt for those who take advantage of it, there are lenders out there still offering remuneration, which means for your business, especially a tool to improve cash flow in the current environment, I'm sure would be welcome too. So moving on, I'd like to touch on an initiative that Get Capital have delivered in the interest for you to serve your customers and gain better insights around what's happening in market during this unusual time. It's something we call the SME Sales Index. Now, Get Capital are privileged to be able to access a lot of data due to some of the products that we deliver. So the idea there being that with that data, we want to share insight with you, and how you decide to action that information is entirely your prerogative. This index looks at all sales revenue for every customer who holds a facility with Get Capital. And we're hopefully going to show you some insights around how businesses have performed pre-COVID and transitioning in and out of lockdown. So if we have a look at the first picture here, what we've actually been able to do is track revenue and have a look at that broken down by different industries. Now, as you can see here, it would appear that the construction industry as a whole has performed reasonably well in comparison to, let's say, accommodation and food, and down the very bottom, fitness and recreation. So no surprises that businesses who have been forced into lockdown for extended periods of time are the ones who have ultimately suffered the most. So some really interesting insight, and we'll continue to track and update this weekly so you get a better understanding as to what industries are recovering, at what rate, and how they've transitioned in and out of this pandemic. So one of the things that could be interesting to look at is tailoring your approach to your customer base based on industry classification, because naturally each industry is experiencing different symptoms and challenges based on the way they've transitioned into lockdown and of course transitioning out of lockdown. Now, what we then decided to look at, which we thought was topical, was JobKeeper payments. And what we're seeing here is a breakdown of businesses who are in receipt of JobKeeper and those who aren't in receipt of JobKeeper. The yellow line represents businesses who did not receive JobKeeper payments, and of course the blue one are those who did. So no surprises here. JobKeeper payments went to the businesses that were in most need of it. So it's certainly gone to the right homes. If we wanted to look at the impact to those businesses in more detail, what this is now tracking is JobKeeper payments as a revenue input. Now, what this actually shows, if we compare the blue line, which is all revenues, including JobKeeper payments as a revenue versus JobKeeper payments removed. For those businesses in receipt of JobKeeper, that represents 15% of all revenue inputs for that business. So it's incredibly significant. And as you can imagine, the question should be raised around dependency on JobKeeper and whether or not at September, if JobKeeper is removed, will businesses be ready to stand on their own 2 feet? So if we have a look at this particular graph up here, we can see that the gap is narrowing, which means businesses in receipt of JobKeeper are beginning to transition out of lockdown and towards recovery. And whether or not they're ready to stand on their own 2 feet and represent revenues that are similar to that of pre-COVID times is questionable. So it's a great opportunity for you guys to use the data and think proactively around how you're talking to your customers and what you can do to help prepare them for September and beyond too. So there's some more insights here, but I'd like to leave some mystery in this particular report for you guys. It looks at industry breakdowns, it looks at metro and regional, company sole trader splits, and it's free and available for all brokers. So I encourage you guys to jump on our website and register to receive those regular updates. Now, moving on, I'd like to finish with sales techniques. And ultimately what I'm trying to achieve for you guys here is open your eyes to a different way of thinking about how to service your customers, and something that will hopefully help concrete a stronger relationship with your customers too. I'm sure many of you have heard the saying, uncertainty breeds opportunity. In every crisis, there's always green shoots, and it can be quite challenging to identify them. I think it's fair to say that the feedback we've received from brokers, similar to most lenders out there, the challenges everybody's faced with is getting access to credit during this time. There's not really a great deal of certainty around what a deal looks like and what lenders' appetite and banks' appetite looks like, and very little flexibility on what we can actually do to sort of look outside of the box, let's say. So in a nutshell, what we're ultimately trying to solve for here is deliver customers the key things that are most important to them. They need access to credit, and they need certainty around access to credit at a time when they need it. And ultimately, they should have flexibility around how they use it and when they use it. So we're going to try and suggest a technique which will hopefully deliver on those immediate needs for your customers. First, we'll state the problem statement. Okay, what we're ultimately trying to do here is deliver value now before your customer actually needs it. Create the need before the need actually exists. And the reason for that is simple. We all saw the impact to lending, turnaround times, and credit appetite during the first wave. And of course, if we end up in a second wave, the impact to service levels as a result of extended hardship claims and what have you, it's going to be crippling, in which case when your customers actually need support, it's going to be challenging to get the support they need in a time they need. So being proactive is actually the key to delivering better value. And that means you've got to help your customers identify something they may or may not think they need right now. So the solution that we're going to propose here is to identify a product in your arsenal that offers immediate access to credit at the time it is needed without the inconvenience and cost typically associated with that last minute knee-jerk decision when they need it. It's hard to get. So be proactive around offering that to your customer. How we propose that you're going to frame this is simple. We'll define the criteria. What we're looking for is a product or a solution that offers open-ended approval, little or no cost for undrawn funds, so ultimately access to the money at a time they need it, so flexibility around when they draw it, and certainty, of course, ongoing access to capital, and no use case restrictions. What we're talking about there is the whole concept of purpose-driven finance. I'm buying a car, I need a loan to fulfill that need. So something that delivers maximum flexibility around how the funds are going to be deployed really does cater for the unexpected. And that's important when we're looking at our tool belt and what's in our arsenal. So the first thing we'll do is we'll look at all the commercial lending instruments out there in the market, and using process of elimination, we'll try and figure out which one might actually solve this problem for your customers. Let's begin with trade terms. Trade terms are often a tool that allows customers to extend the terms of payment, in which case it's use case driven. So we're going to knock that one out. The next one we might look at here is equipment finance. Once again, buying a car, buying a piece of gear, need finance to fulfill. So use case, purpose driven, not going to fit the mold. Invoice finance or debtor finance, well, that's a facility, for want of a better term, but it is typically linked to an invoice where a customer or business can release cash against the value of that invoice. So it's tied to the invoice, so it's not flexible. So we're going to knock that one out too. Then we get down to three options. We've got revolving facilities, we've got term facilities, and we've got the traditional commercial property loan. Well, term loan or a business loan is very much linked to the purpose, in which case, use case, not satisfied. What you're left with here is commercial and overdraft or line of credit. Now, commercial property loan, it's possible to unlock the equity in your property secured against the loan. You may be able to refinance and access that money. I think the biggest challenge surrounding that as an approach would be that you have to meet obligations immediately. And should that funds be sitting in offset, that might negate that cost. However, it's still tied to your property. So it is a possible solution right there and one that should be explored as an alternative. What we're ultimately left with here is a revolving facility. Now, depending on where you decide to take your business, some will have no cost or some will have very little cost involved with having the facility active and funds not drawn. But consider this as an alternative or the ultimate solution to cater for uncertainty at a time they need it without actually having to fall subject to turnaround times and impacted credit appetite from banks and non-banks as well. So the three takeaways I'd love to leave you with for today. It's really important to leverage your environment, and that's everyone. That's your industry bodies, the FBAA, it's your aggregator friends, it's your lending partners, it's access to free information that can help empower your conversations with your customers. I'd like you guys to think about your new norm. In my opinion, your new norm should be proactive, not reactive, in which case, try and think about what your customers need before they need it. And ultimately, the way you can deliver on that is by embedding yourself in your customer's ecosystem. Figure out how you can become a more meaningful part of your customer's relationship and running their business. And hopefully that'll drive better outcomes and more longevity in your customer relationship. So thanks for taking the time today to listen. Hopefully you've all gotten something out of it. Following this session, you're going to receive an email from Mariah. Now be sure to provide her with any questions you want covered in tomorrow's panel session. That's it from me. Thanks again. Back to you, Peter.
Well, Cristian, that was really insightful. I think that index a lot of people will use quite effectively. Now, let's go to our next speaker. It's Donelle Brooks from Lend, the Platinum sponsor. Now, she's going to be talking to us about shifting your business to utilize today's advanced technology, and particularly their platform, for best practice in commercial lending. Take it away, Donelle.
Thanks so much for the kind introduction again today, Peter. And it was certainly fabulous to hear from one of our lending partners, actually, Cristian from Get Capital, really start to unpack the SME space and the asset space. So thanks again, Cristian, for sharing the insights into asset and unpacking SME. It probably leads me right into why you need to utilise technology and why shift your business to gain access to all of these fabulous products through the Lend platform. So I think we should just get started. We've got a short message here from Bill, who's our CEO, but really simply, without reading all of it, you know, we really wanted to change the way and the architecture that brokers, borrowers and lenders interact and how they do that. And we really appreciate the insight and the feedback that we've received from our broker family over the last 6 months. And we really, really implore you to keep giving us that feedback and keep reaching out and letting us know what makes a difference to your business. So we have a look at, you know, the Lend platform as a quick overall snapshot. It's an all-in-one lending platform. It'll save you time. You'll learn the probability of your clients getting their loan approved with Lend Score. You'll retain full control of your relationship with your client and, most importantly, with your lender. Best lender matching technology, fast same-day commissions and full CRM functionality. And what we're really going to do now is drill down into those 5 key benefits of implementing the Lend platform. So first of all, it's an all-in-one platform. So it's a single application. That's right, one application form, including bank statement collection. It instantly analyses and assesses the probability of your client obtaining a loan. Its best lender match presents the most suitable lenders, and you can choose which lender to send the application to, or you can flick it to automatic and let the system do the work. If a lender is unable to help, you can send to the next lender without recapturing bank statements and without completing a new application form. We give you real-time status updates from all of our lenders, enabling better client communication. And we have end-to-end deal flow. So that includes notifications and ensures that all of your deals you can see and understand exactly where they are at any time. Serviceability calcs and CRM tools are also available, such as SMS, email marketing, calendar and tasks. And last but not least, the process does not impact on your client's credit file. So too, the magic of lend score. This happens when you supply bank statements for your application, and you can do that if you're already using a bank statement provider, or we give you free access to the Illion platform through Lend. So it's a really powerful tool, and it provides you with a score that gives you a likelihood of your customer obtaining finance. All you need to do is complete the bank statement link and you will be given a lend score. Thirdly, we've got the magic of lend size and lend match, and these technologies both work with or without bank statements. So there's no need to try and establish which lender might be suitable, and don't we love technology when we flick off the screen? But look, there's no need to try and establish which lender might be suitable for the profile of your client. As Mal mentioned, understand the profile of your client and understand the story, and then let the tech do the lifting. Continual research on the best small business loans and keeping credit criteria up to date and onboarding new lenders is our business. We want you to be able to work on yours. Retain client control and relationships. This is super, super important, and we understand that. We provide you with the technology. You retain your relationships. No middleman to confuse the clients. Full control over which lenders you want to work with and which ones you want to send applications to. Fully branded broker to client comms, including your brand colours, your logo. Maintain lender relationships with the ability to discuss applications and scenarios submitted through the Lend platform directly with the lender. And also, you'll get access to lenders that you don't currently use now. Fast same-day commissions. Pricing and commission service is actually unmatched. We're designed to pay out the commission as soon as the deal settles, and brokers get the same commission as they've always enjoyed, but you actually get more time to work on more deals. No need to invoice and wait for payment. It's all automated for convenience, and same day refinance commissions as well. And we also give you some great reports so you can see the difference between your new, your refinance commissions. We give you all that information inside the platform. So now let's have a quick glimpse into the power of Lend. And what we want to do here is give you a look at the dashboard. So this is your dashboard view. You can view your leads by stage, your task notifications, you can view lender profiles and add new leads, and you'll see all your key metrics. And you would think that after 12 weeks of doing this that my mouse control would be a little bit better, but anyway, let's continue. Now we're going to have a really quick look at the lead view. So you can view your leads and drill down into them via stages. So pending, attempting, in progress, rejected and settled. You can use filters to drill down even further, and you can quickly see the latest status update. And all you need to do is click on the lead to view more details. This is the lender selection and the lend size and match at work. So all you simply need to do is select the lender, click send to lender, and then you'll be asked the question, do you want this to automatically go to the next lender, or would you like to choose? And that's all getting ready for when you do get that first no. Here we have the individual lead view. So this is where you get an overview of the lead, the bank statement analysis, the lend score. You can see the history and the lender matching. And also on the right-hand side, on the far right-hand side, is where you can see your CRM tools and also your ability to send to lender. Here's a quick snapshot of the bank statement analysis. This is one very small part, and I'm also going to follow it on the next slide. There is a lot more to this analysis, but I'm trying to keep it to 10 minutes. So we have a look at the decision metrics around, we give you revenue charts, day and balance charts, credits versus revenue, other loans detected, expenses, and individual monthly transactions. So we don't just look at revenue related deposits as a total, but we look at that unique source because we know that speaks to concentration risk. And here, just to give you a quick look, we've got the monthly revenue chart and the day and balance chart. So again, flicked over that really quickly, but certainly, you know, all our details will be out in the email after the session, and please feel free to reach out to have a chat about anything that you have seen today or want more info on. Lend ED is an education series that we're really proud of that we're releasing in conjunction with the Masterclass. And again, it really supports some of the conversations that we've heard this week around education. This is purely from a lender's standpoint, addressed to you, our brokers and partners, how to best write a deal. And you'll hear from all of these 22 lenders about each of their individual products, who it suits, what the pain points are, what industries they're working in, what they're not. It really is a great education series. You're going to get insights and understanding. You're also going to get clarity and answers to some of the questions that you might not normally ask. That will result in improved conversions and increase your commissions. If you join the Lend platform before the 30th of September, you can access Lend ED for free. And recently, the Lend Education Series has also gained the approval to obtain CPD points. So for each episode that you watch, and they're only around 10 to 12 minutes each, you will be able to get CPD points. Also, as part of the education series, we have the lender profile, and this is where in text you can go in and understand the product. Minimum terms, minimum and maximum rates, and all of the individual products that the lenders have to offer. Look, just to finish up, I really want to say thank you. Thank you for giving up your time. Thank you for attending another Zoom session or a webinar session. But I really think that the content that's been delivered to you all over the last 4 days can really add a lot of value to your business. So thanks again for taking the time to join the Masterclass series, and I'll hand it back over to you. Thanks, Peter.
Thank you, Donelle. I think most of us would benefit from the observations you've made about using technology to get better solutions for our customers. Well done. Okay, let's go to our next speaker. It's Tanya Pead from Speedy Finance, the MC sponsor, and she's going to be talking to us about assisting yours and your borrower's cash flow, a really important topic.
Thank you, Peter, for that introduction, and welcome everyone. I'll be talking about assisting yours and your borrower's cash flow today. An introduction to Speedy, as I know a lot of you probably have not heard of Speedy Finance. They're a boutique lender that have actually been in operation for over 16 years. Originally, they were focused on small consumer debt, but due to COVID-19, there has been a bit of a refocus and a reshuffle with the business. And we're now looking at secured business lending as their primary product. Understanding that the third-party network would give them so much more reach, they decided to utilise the broker network, and that's where I've come on board. We've all heard the word diversification. It's been around for about 2 years, and that's where I'm going to come in as well. 30% of your borrowers will be self-employed. Are you utilising that database, and are you taking every opportunity that you can to earn extra income where you maybe not have had that opportunity to earn it before? Can you expand their business and think bigger? Give them alternates to the traditional residential mortgage. Speedy client is anyone who is self-employed and looking for funds for their business fast that can utilise the equity in their property. How can Speedy assist your clients and your cash flow? Access to funds from 10 to 250K pretty fast. We can offer approvals within 24 hours of submission, funding within 24 hours of settlement. Average time from submission to funding is 4 days. We've got two core products. We actually do have three, because we do have the SME government-backed loan product as well. But our core products, short-term interest only, 3 to 6 months. P&I term loan up to 24 months. Because we use a very simple referral system, you don't have to spend hours and hours putting an application together. You just give us the simple details and we'll do the rest for you. That gives you time to work on other deals that you can be earning income from as well. And we will do all the work for you in the background, and you've earned a good commission. Why use Speedy? We're a small business. We want to grow as you grow and as your clients' businesses grow. Our underwriting is really simple. We assess each deal on its own merits. We don't use an algorithm. We don't use a credit score system. We look at every single deal individually. You will have a dedicated underwriter that will work with your clients from start to finish. We are a fintech company. We use extensive fintech products to assess each deal, which makes the process so much faster and so much easier for our underwriters and your client. We do have a dedicated broker portal, which at any point you can go on there and have a look at any referrals that you've sent through and see what stage they're at, and know exactly where you stand, so you can get your commissions. Commissions are paid day after settlement, again, which helps your cash flow. Settlement is day of or day after the documents are received. And like I've said, we're one of the SME-backed government lenders. I don't have time to go through all our scenarios, but just really quickly, a good one for you just to understand is we had a business that was looking for funding for a project with another large company that would have seen them be able to put their products into a large retail chain. They had an ATO debt, they had another large business debt as well, plenty of equity in their property. We consolidated everything, gave them the capital that they needed, and which saw them double their turnover moving forward. Please reach out if you need anything, if you have any questions. I'll hand back to Peter. Thanks, Peter.
Thanks, Tanya. I think all of us benefit from insights when it comes to cash flow. Well, we're coming to a close now, and I would like to make it my invitation to you to attend the panel session tomorrow. Our main content presenters will be on the panel, as well as some other industry experts. And it's a real chance for you to get your questions answered from people who I'm sure you respect highly. So remember, if you have any questions, don't forget to email them to Mariah, and they will be answered tomorrow in the panel session. Now, as advised previously, go to the FBAA website, click on for upcoming webinars to register, and of course, you can register for tomorrow's live panel session as well. I'd like to thank the sponsors, the platinum sponsor for this conference, Lend, and our MC sponsor, Speedy Finance. And without these guys, these sort of things never happen. Now, you'll be getting the presenters' contact details in the email following these sessions, so make sure you get in contact with them for more information. There is the CBTD code that will be provided in the follow-up email, a short survey to complete with your feedback. So please take the time to fill this out. These feedback forms are really important for the organisers. And I'd like to thank you again for attending today, and make sure you turn up to the panel session tomorrow, which is going to be a live one. I'm really looking forward to it. I'll see you then.